You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again to commence our broadcast activities here on the old network. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting website upon which so many of you are mainlining and binging these days. If I sound distracted, I got stuff flying left and right in chats and all sorts of other fun stuff. Let me get rid of all that so I can focus all my attention on you fine folks. Of course, where can you go if you want more in your lives? Theoptionsinsider.com/pro is the place to go to learn more, to get access to our great pro Q&As. Got a newcomer coming up on our pro Q&A tomorrow. Should be fascinating. The now world-renowned author, as well as vol researcher and master of dubious correlations, Mr. Ash Vyas out there, a.k.a. AK Vyas out there for those international thriller fans. Does moonlight as a bit of a novelist these days. That'll be a fun one. Also, Options Oddities, of course, every Friday. Giveaways throughout the weekend, a whole bunch more. Theoptionsinsider.com/pro is the place to go for all of that fun. And of course, if you listen on demand, as we know many of you do, we see the numbers coming out hot off the heels of the busiest month in the history of the network. 15-plus year history. That's crazy town. So for all you on-demand folks, all we ask, if you like what you hear, keep rating and reviewing it wherever you get your content so new folks can continue to discover the show, as they are clearly doing every week. And now it's that time, listeners. We are beginning our broadcast week, which means we have to kick it off in fine 80s fashion by commencing our favorite game around here, at least a lot of our favorite game. I'm not sure if the Rock Lobster can handle this game, which is probably why he can't make it today. Anyway, he's never been able to guess an 80s wrestler. But of course, this is our Name That 80s Wrestler segment, the portion of the show where we play you a theme from some beloved or perhaps less heralded. Might be going that way today. Less heralded, even those guys kind of know. Less heralded 80s wrestler out there. And you, the listener, have to play that Name That 80s Wrestler. So without further ado, this week's contestant is another in the unfortunate growing category of 80s wrestlers who died prematurely. This one, I'm pretty sure he was a heel. I can't recall a time when he worked face. Maybe he did, but he was well known as a heel out there, and also died prematurely. This one through unnatural means. He was murdered. So a lot of tragedy involved in this story. But can you guess through his theme music? Can you name that 80s wrestler? right, there you go. There's your flavor. Little bit of French flavor thrown in there. The WWE, or really WWF back in the 80s, not exactly subtle. Now let's go out to my one cohort, my one compatriot. Unfortunately, the Rock Lobster and the Greasy Meatball unable to join us today, but we are joined by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management, also the owner of BitcoinReallySucks.com, which is proving true today, that's for sure. Mr. Uncle Mike, A, welcome back to the program, and B, can you name this tragic 80s wrestler, sir?
I'm going to go with, thank you for the welcome, and I'm going to go with Lord Steven Regal.
Interesting guess. I'm not sure if that had a French flair for that one. That was obviously a French theme, but no, it is not, sir. Unfortunately, it was Dino Bravo.
That was my second guess, but that's when you said French, that confused me because he was also known as Canadian Strongman Dino.
Yeah,
Bravo.
he was French Canadian, right? That's why I didn't want to clarify, because if I said French Canadian, then it'd be too easy. But that's why I thought that'd be a little bit of a confusing left curve to throw you there, and it clearly worked. Yes,
it did. Yeah, that your hit threw me off, actually.
Well, Dino Bravo, of course, if you saw the Dark Side of the Ring, listeners, was gunned down in Canada, shot 11 times by a mysterious assailant. They think, if you believe the Dark Side of the Ring, they think it was because of his involvement in an illegal cigarette smuggling ring, Uncle Mike. How often do you hear that? But apparently that was all the rage in Canada. I believe this was in the late 90s when he was shot. So yet another of the legion of 80s wrestlers who are no longer with us. This one for circumstances even more bizarre and horrific than usual. So there you go. A little bit of the old Dino Bravo flavor, a.k.a. Wasn't he the world's strongest man for a while there, too? Something along those lines. Strongest man in W. Wasn't that his gimmick, too?
One of them, yeah. I mean, he was never really in the strength world. He was never, I mean, he was strong, no doubt about that. But
I'm not saying it was official. He just called himself that in WWF.
I mean, yeah, he was no like Ted Arcidi, Ken Patera, Mark Henry. Those were like the legit strong men. And Dino Bravo's in that category, but he wasn't up at their level, from what I remember of my strength people of the 80s.
It's a good way to categorize him. You know, we knew him, but he wasn't up at the level of, shall we say, the top tier of the 80s wrestlers. As we keep on rolling, it is time to see what level this market's at. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is going on out there in these wild, woolly, and occasionally wondrous and whimsical markets. Not exactly too whimsical today. I'm just going to put that out there for you, listeners, because we're seeing a whole heck of a lot of red on the screen. S&P doing its downside dance again for the second straight session, aggressive downside dance. We were 2+% on Friday. Today, north of 3%, 3.13% as we kicked off the show, off 122 handles. So that puts us south of the 3,800 level. And people have been asking for a while, what level is our buy-in level? Where should I buy in on S&P? Where should I be buying the dip? And we've been saying for a while, maybe keep your powder dry on some of this. We had a great guest on our Pro Q&A last week who talked all about the optionality of cash in an environment like this and how he was putting all of his clients into cash and looking to buy in the S&P at least at much lower levels. Hopefully a lot of you have been taking some of that messaging to heart, or at the very least have been lightening your positioning or hedging out there, because these have been some rough markets of late. When we see these second shocks, we were talking on Friday on Vol Views about how the vol markets and the vol products didn't really seem to be resonating. Now that we're seeing the second leg of this sell-off, a little bit more resonance out there. Let's go through the major indices first, and we'll get into the vol response. I said S&P off almost 3.15%. The Dow off about 2.25%. The NASDAQ off nearly 4%, about 3.85%. So we are seeing a lot of blood red on the screen. That means VIX, when we kicked off the show, a little bit north of 33, about 33.25. That's up about 8 2/3 handles from where it was on Monday's, or I should say on Thursday's show. So that just shows you we got a muted response, and then it kind of trended lower towards the end of the session on Friday. And vol markets weren't even backward on Friday, which is something we discussed on Vol Views, just kind of the surprising lack of a response out there. That is not the case anymore. The vol markets, vol futures, clearly backward. We're seeing the June future 32.40, the July future 32.10, and then August 31.65, September 31 and about a half. So kind of the response maybe you expected to get on Friday, working its way out into the vol markets today. VVIX 109, so back north of the triple digit level, listeners. So again, that's the level we've been watching for a while. Will we hang out here for a while? Time will tell. That's up 14 points from where we were on Thursday. So a lot has changed just systemically since Thursday's show. VXX 25.5 back up nearly 4 handles, 3 3/4 points from last show. UVXY was threatening the 12 handle not too long ago, 17.15 when we kicked off the show, up 4 1/4 points from our last episode, listeners. A lot of living out there. And SVIX threatening new lows, 960 below the 10 handle. SVIX, of course, the inverse VIX product. So not surprised it's taken a beating today. Down 2.3 points from our last show. Again, flirting with new lows. I think the actual lows are down around the 930 odd level. So not quite there, but getting close. And UVIX 21.5. That's up 6.6 points. UVIX, the 2X levered product. And VolQ at about a 37, up 7.5 points. So that's a whole lot of volatility living that we've done today. Mr. Uncle Mike, not exactly an Uncle Mike type of day out there, but these are the days people want to hear from Uncle Mike. Maybe talk him off the ledge. Maybe explain to him a little bit about what you're up to out there. So what is Uncle Mike up to on a blood red day, sir?
There's plenty of reason to panic. I got to go. No, just kidding. No, I mean, in looking at this today, I mean, granted, this is first thing I need to say is that this is why I only give my 50% guarantee whenever I give market calls about what the low for the year was a few weeks ago. So that's why I do that. But in terms of where I'm at, what I'm doing for long-term buy and hold, I'm still long-term buying and holding. Long-term buy and hold means long-term buy and hold. And I'm very serious and committed to that. And so, yes, it's painful today, but that's part of long-term buy and hold. In terms of my shorter term aggressive strategy, I'm still pretty far out of the money. But I mean, pretty far is a relative term now in this market of what pretty far actually means. But I have not rolled yet, but I am hedged through Wednesday. In that I had to pay a little bit more money than I would want to for the hedge, but I'm okay taking on that risk because I don't want to get my face ripped in. And so that's where I'm at going into Wednesday right now. I have a short put spread still, and then I bought some other protection for that spread through Wednesday for the time being. I had my garbage spread that I had for the weekend. Actually made a profit on that. That almost never happens, but did make a profit on. I took that immediately or within a few minutes of when the market opened today. And so but with it, one thing that I'm noticing right now, we're not really getting too far away from the 3,800 mark. If you look at the futures last night, we got to the 3,800 mark in the S&P, and we just kind of sat there. It was very flat from roughly 3 a.m. on. And so today, with the market that we have, really considering how much movement we had the night before, we opened the market at roughly 38.15, 38.10, something like that. That's about as high as we've been today. We had a little bit of a sell-off a little bit after 10 o'clock, but now we're getting back to the 37.80 level. So we're not having the free fall during the cash hours, but we did have the free fall during the overnight hours for the most part. Now, in terms of where we're at with a few things, folks, the money's going to come back somewhere. We just don't know where. And so what I mean by that is we have stocks down. We have bonds down. The 10-year note's having a big sell-off today. We have all the commodities except for, you guessed it, oil for the most part are down on the day. And oil's not even up that much. So when everything's down at the same time, oftentimes the money will come back in the next couple days. We just don't know where yet. So where is it going to come back? Well, that's the trillion-dollar question that we all want to know. But I personally have a hard time believing that all this sell-off money has gone and shifted into VIX products, because that's the only thing green on my screen. So we have that going. And another thing that we have, of course, there's inflation fears. We have the Fed coming up this week. But the other thing that's kind of a concern or something that could be causing this sell-off is that a lot of people are getting margin calls on their Bitcoins. And with the paranoia going on with people not being allowed to withdraw their money from certain Bitcoin places and things like that, that's cause for concern. And so I think that's also contributing to the downturn of this market. And I will conclude my section of the trading block with, once again, Bitcoin really sucks. And that's, I will pass it back to you on that note, Mark.
So this sell-off here, I know we debated, and our question of the week a few weeks ago was, where are you comfortable buying back in around the S&P? It seemed like a lot of our listeners were looking at that 3,700 level, which we are around 75 handles away from right now, Mr. Uncle Mike. I know you were looking at some of the rallies recently and doing some stuff out there in the S&P, but has the second leg now that we're seeing here of the sell-off, has it caused you to change any of your outlook? Obviously, your long-term buy and hold is going to be long-term buy and hold, but in the near term, has it caused you to rethink any of those levels? Or maybe are you excited maybe about a 3,700 level? You think that's our next big support level there?
I mean, I think it definitely could be. At this point, it's just we have a falling knife right now. And if you want to get into this market at this point, I think you really need to scale in. I think you need to maybe sell puts at like somewhere at a much lower level because you can take advantage of it with a 33 VIX. But for right now, if you want to capture this market, you're going to have to catch a falling knife. There's no doubt about that. I don't think we're going to have any stabilization in the near term. I think it's either going to all of a sudden we're going to be at 4,000 by Friday, or we could be at 3,400 by Friday. I mean, I'm expecting a lot of movement to continue this week.
That does seem to be the case. If you want to capture this market, listeners, wise word, you have to catch a falling knife out there. All right, let's see how many knives, I should say, are falling out there today as Uncle Mike, brave compatriot that he is, going to transition to the mobile studio as he joins us here through the rest of the show. That's how devoted he is to you folks, listeners out there. Let's go out first, see how much paper is lighting up our tape out here today. And spoiler alert, a lot. These are the types of days, at least from a vol product, and to a degree the index products as well. I mean, looking at some of these numbers, these are pretty aggressive. These are the types of days that tend to lend themselves to a wee bit of paper on the screen. VIX lands 654,000 contracts on the tape already right now, listeners. That's a heck of a lot of paper. That's pretty much 100K more than the ADV right now. So that ADV, after kind of struggling over the last week and change and not really getting a heck of a lot and actually coming in a little bit, going to probably be popping after today. We might have a 1M day on our hands in VIX land. Haven't seen one of those in a little bit. Looks like we're on trajectory for that today. SPY blowing way past 1 million, obviously. 6.37 million contracts on the old SPY tape out there today, listeners. The ADV, 6.97, so almost at a day's worth of paper in SPY already. The S, same deal, 1.9 million contracts in S-Land. The ADV, 2.15 million. Small caps, the IWM flavor, 1.03 million contracts already. That blows the doors off of their ADV. Their ADV is only 713,000 contracts, listeners. And the Qs, 2.36 million contracts. Again, you kind of expect the Qs to be rocking and rolling on a day like today. The ADV, 2.69 million out there. So we got the VIX and small caps already surpassing a day's worth of volume. We have the S, we have SPY, and we have the Qs just about to break through a day's worth of volume. So a lot of paper on the tape. That's the takeaway. What's going on out there in single name land, you might be asking? Well, let's find out. Cost you 214,000 contracts to break into the top 10 today. That's decent, but that's not the most active day we've seen even in recent history out there. So interesting stuff. Again, when everything gets kind of macro focused out there, we don't see the single names always blowing the doors off. And that seems to be the case again today. Number 10 gets you to Exxon Mobil. Exxon taking a bit of a break today, off 4.5 handles, or about 4.5%. Speaking of Mobil, I do believe that was the gas station that I tweeted out over the weekend, showing you a screenshot of just how joyous it is to drive in the Chicagoland area. Some stations well north of $7 downtown. I think that station was up around $7.40 for their premium offering out there. So, yeah, welcome to Chicago. Maybe ride a bike. The ExxonMobil feeling the heat today, off $4.50 again, about 4.5%, right around the 96 handle for Exxon. What's the high for Exxon out there? It was obviously recently. It was 105 and about a half. That was on June 8th. Ha ha! Go figure. Another one, listeners. They giveth and they taketh. This chart runs all the way up to June 8th. It goes from $62 last year, June 14th, all the way up to June 8th, and then right back down again. I was talking about this to the Russell folks recently, and I do want to commission some research on their behalf because I can't think of another big market event that happens around that June 8th timeframe that could possibly have any sort of magnetism or impact like this we see on all these smaller names. Exxon, not a smaller name, obviously. That's actually a bigger name. So that's interesting out there. 95, 93 now, breaking through 214,000 contracts on the tape for number 10. This one's going to take me a while to get used to, number 9 here, listeners. This is Meta. Do you hate this one as much as I do? It's a terrible name. I get they're pivoting and they want to reflect that, but maybe come up with something better. You got to love when they spend hundreds of millions on branding, and this is what they come up with. Meta Platforms, Inc. Even on the ticker platform, they have to remind you in like parentheses next to it, Facebook, in case you forgot. Meta Platforms, 167.72. My goodness, off nearly $8 or 4.5%. They are flirting with their 52-week low. Let's see. They hit it today. So 166.67 came today. So we are now breaking through some of the lows we set back a month and change ago, listeners. So strap in. These are some good times ahead here. How low do we get? Yeah, we got down previously. 175 was on April 27th. And then ever since then, they've been kind of north. And now Meta feeling the heat, 221. Number 8, Baba. Everything was great. Everything was rosy in China just a few sessions ago. Right now, not so much. Baba off nearly 11 handles or 9.81%. $99 is where Alibaba is hanging out. By the way, Meta, 221,000 contracts. Baba, number 8, 236,000 contracts. Here's another name we were talking about a little while ago. And it seemed like all the paper at the beginning of the year was predicting this name was heading to zero in a freaking heartbeat. There was a ton, as you recall, a ton of put paper lighting up the tape in American Airlines. Today, they're at number 7, 277,000. The stock off about $1.40 or nearly 9.5%, trading right around $13.32. They're about 90 cents off their low for the year. Their low for the year was $12.44. So they didn't hit that today. They hit that back on the March 7th timeframe. Of course, the day is young. We'll see if looking at this chart, they may threaten it later today, but we shall see. American Airlines, though, good for 277,000 contract. This name, man, talk about a yo-yo, a topsy-turvy name out there. This has been just synonymous with reopening after the pandemic. Then, oh no, this is terrible. Then here we are reopening again, and oh, here comes Omicron, and it just. What a saga this one has been. And once again, back to the dark side, listeners. Good for 277,000 contracts. Number 6, one of our kind of old stalwarts out here. This is NVIDIA, 332,000 contracts. They're off $11 today. So even the chips not immune to this today, off 6.5%. Let's see. How low have they been on the year? They're pretty much right around their 52-week lows as well. Their 52-week low is 155.67. Let's see. Did they hit that today? They got pretty darn close, about 156 and change today. So they didn't quite hit the 52-week low today, but they got pretty darn close. Yeah, we're back at levels well below. They're now down about 12% on the year, and we're back below levels they were last June, obviously. So, yeah, and the high for the year was 346 on November 29th. That's a rough one. 332,000 contracts on the tape for NVIDIA today. Number 5, you listen to our options oddities. This name is just kind of a embarrassment of riches when it comes to odd options paper. Just almost too, you can fill a whole show with just the weird size paper that goes up in charge point. Today, it's number 5, 350,000 contracts This, of course, the electric vehicle infrastructure company. 12.20 or so off 220 right now, or 15 1/3%. They are not quite at their 52-week low. That would be $8.50. Looks like that came on May 11th. The previous low for a lot of these names out there. Prior to that, it got up to 36 and 36.86. That was on June 29th, not quite June 8th. Today, 350,000 contract. I'm kind of scared to go see what kind of paper is lighting it up in ChargePoint today. They do some funky, weird ratios that take you an hour to deconstruct what the hell they're actually doing. Number 4, back out to kind of another frequent offender. This is AMD. 351,000 contracts out there. Let's see what's going on in AMD right now. AMD off nearly 6 handles or 6.3%, 88.85 right now. They're 1 year low, 78.96. So not quite there, but within a bit of spitting distance of it. Number 3, yes, I said number 3, it is Tesla. They kind of looking to follow the Amazon lead that they kind of set not too long ago with their split. Of course, maybe the market helping them out today. Off 43 handles or 6.15%. Good for 655 and a quarter. I'm sorry, 654 and a quarter. But that's where they're hanging out right now. Tesla good for 814,000 contracts, number 3. This keeps up. They won't need to split, listeners. But as our number 1 spot will tell us, spoiler, split works at least from a volume perspective. Number 2, it's the fruit company. How much do they come in for this bad boy right now? 133 and a third, off about nearly 4 handles or 2 3/4%. Their 52-week low is 125.94. That came, looks like, about a year ago. So we're just looking at them kind of just getting back to levels from a year ago. Their high was 182.94. That was back, actually, not quite in November, but actually on January 3rd, looks like. So interesting levels for Apple, but they are coming for it again. So if you look at Apple right now, we're still at lofty levels. We're back to where we were about a year ago, but obviously Apple has been on quite the tier ever since March of 2020 when it was trading a split adjusted. It got down to 57.31 in the nadir of their listeners. Good today, 864,000 contracts. And number 1, again, proving that stock splits have some value, at least from a volume perspective. It's the Amazonians, 1.08 million contracts. Amazon about to break the par strike, 103.60 off 6 handles and change, about 5.5%. Looking pretty dire out there in Amazon. A year ago, they were trading 170. They got as high as 188. Again, they split, but if they had waited, maybe the market they wouldn't have done 20 for one split, but they would have taken a lot of bloom off this rose. Man, Amazon, crazy to see them back below, or soon maybe about to be back below triple digits, when in the past they've been in the 1,000 handle for as long as I can remember out there. So intriguing stuff out there in the Amazonians. Good for, again, 1.08 million contracts out there today. If we're looking on the earnings front, not a heck of a lot on the tape. We're kind of waiting for the next cycle to really kind of restock the earnings gun. That said, there are a few highlights, even on a kind of regularly dry week like this week. Like today, there's Oracle. Oracle popping off after the bell today. Let's look at them really quickly because we do have a fresh off the machine move results report for Oracle, courtesy of our friends over there at Orat's Land. They are today after the bell. They're trading 67.14 when this report was run. That gives you some sense, listeners. They're trading 64 3/4 right now, off almost $2.50 or 3.5%. So they have sold off even since this report was run this morning. The straddle they were pricing in 5.25. In the past, they've moved 4.25. They've already moved $2.50 since this report was run. So yeah, you can maybe argue that implied move, maybe not enough. We shall see. Again, Oracle, one of the few big names popping off out there. Let's look really quickly. Any other names that are of note out there? Kroger coming up on Thursday, and Adobe. So if you want to know what's going on out there in the food volatility, which we all know given the inflation scene out there, food is a very volatile space. Kroger 16th before the bell. 51.09 is where they were trading as of this report. They're trading $50.50 right now, off about $0.50 or 1.1% on the day. They were pricing in 4.7%. In the past, they've moved 2.5%. Not quite doubling, but easily argue that there is more vol merited in the food side of the space right now, because so much volatility when it comes to pricing and inflation and everything else out there. So Kroger pricing in some juice. Will it be enough? We shall see. Listen, let's go out again. The season, the way the ORCL folks calculate it for you out there, they break it down into 6 weeks. So we have the final numbers for the 6 week. In week 6, by the way, 81%. So started off looking kind of dire at 64%. Then it started getting better every week, 70% for week 2. Week 3 was the highlight of the season, at least from a vol buying perspective, 98%. So close to breaking even, not quite. Week 4, 82%. Week 5, 87%. So the other highlight of the season. Then week 6, 81%. So started off low, had a brief flirtation with optimism, then right back down again. The season ending up averaging out at about an 83%. The average for the past 3 years for a season is 88%. So that actually is below average, which is interesting. It seemed like the earnings vol was, and the worm was turning out there a little bit. Maybe these numbers showing us perhaps we were a little bit premature with our enthusiasm for earnings vol out there. Still a lot of enthusiasm, I should say, for earnings trades. We have the trades report still running for you. No new entries or exits today, but we are tracking for you 92 long straddles, 41 short straddles, and 95 long calendars. You guys can check out how all those are performing right now. TheOptionsInsider.com is the place to go. Meanwhile, we got to get on out of here. Uncle Mike's putting on his big boy pants today. He's going to join me for our next segment, which is the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get whimsical. We can't get too wild, though, because Uncle Mike is in the mobile studio today. We don't want to get him so excited that he gets in an accident. Uncle Mike, can you handle the current levels of excitement with the Odd Block, sir? I don't want to turn it up too much for you.
I mean, I struggle with the excitement of the Odd Block when I'm not driving, but I'm hands-free. I'm good to go. Let's talk some odd options.
All right. If we hear squealing tires, listeners, we know we've gone too far. We have to dial Uncle Mike back from the ledge. Maybe in that case, quite literally. Let's go out first to a name we haven't talked about in a little bit. This is GOGO Wireless, ticker symbol GOGO, G-O-G-O. If you've been on a plane recently or in an airport, you're familiar with GOGO Wireless. They provide a lot of that in-flight connectivity. Trading right now, $18.29 off 81 cents or 4.25% on the day. This is the name that a year ago was trading $11.71. So this name, again, I was talking about American Airlines before, but clearly this name was also feeling some of that reopening trade because they were on a tear for most of the year. They hung out in that $11 to $12 range until September, and then they shot up. On September 24th, they went from $12.30 up to $18.57, so north of where they are right now. And then they kind of hovered there for a little bit before selling off again back down to $12.30 again on December 1st. They had kind of given back a lot of that rally. And then they started rallying again in February. They went from $13.50 all the way up to $23.25. And their high for the year was $23.69 on April 14th. So they had a nice, pretty much over 10-point rally out there in GOGO. And then they gave some of that up again down to about $18 on May 13th. Then they tried to rally again recently up to June 7th. They hit $20.83. And then ever since then, they've been selling off pretty hard back to where they are right now, pretty much 18.25 right now. So they're still up substantially on the year, 56%, about 6.5 handles. So it's still a good year for GOGO Wireless, but not quite as good as the 23.70 level they were at back in April. So what has our Eye of Sauron found for us out here today? If past is prologue, listeners, given all the names we've been breaking down of late, I'm going to go out on a limb and maybe guess it's probably some puts, but we shall see. Let's find out. Oh, yeah. I am correct. They are the AUG 15 puts going up 5,000 times. Looks like paper lifting the offer. They were fairly tight, 65 cents at 80. None of these crazy 50-cent or $2 wide markets. We've been profiling some of these ridiculous names lately. They lifted the offer 5,000 times. That is a 74.5 vol. If you are wondering, let's see, where was the stock? The stock was a little higher. The stock was 18 double when these went up. So these puts are looking a little bit better. The stock's off about 30 cents from that level. There are earnings in this cycle. The earnings are on August 4th. So that should add a little bit of intrigue to these as well. Certainly is going to add a little bit of juice to them. That's why they were a 74.5 vol. So, Mr. Uncle Mike, this is an interesting trade, kind of emblematic of a lot of the trades we've been seeing of late, which is people scrambling to get their hands on some puts. In this case, we have someone coming in, scrambling. He's giving himself a little bit of time. He's getting a couple of months. He's also getting an earnings cycle in here. So factor that into the price, but he is paying 80 cents or a 74.5 vol to hedge an $18.25 stock at the 15 strike. So he is paying quite a lot to buy protection far below where we are trading right now, even though it's not the 52-week low. That would be 961. So, Mr. Uncle Mike, it seems like somebody is perhaps a wee bit concerned about the future outlook for GOGO Wireless. What do you say, sir?
Well, I think that as you're looking at this, the theme that it seems to be happening right now is that, yes, we're above a 30 VIX, but it's almost like there's the new normal in that if people are willing to pay for higher premium, they're really concerned about that much of a downturn. I'm personally still more of a fan of a spread. Now, granted, maybe he's looking to make some money off just buying some puts and having the gamma and the vega work in his favor at the same time by going with the single leg put play. But if it's for a hedge, if I'm confident enough to where I want to put my money in a stock, if I like it at 20, I'm going to love it at 15, or like it at 15, I'll love it at 10. That's how I'm feeling if I'm going to own a stock. And so if that's the case, I would definitely be more apt to want to use a spread for a hedge. So if he's looking at this as a play to make money off of some gamma because he thinks there's going to be a big pop to the downside soon, I think this is a great idea. If he's looking to this as to hedge a holding that he already has, I don't like it.
Yeah, it's kind of hard to love spending all that premium, all that vol on a strike that's pretty far out of the money at this point. Yeah, hard to love these. Again, you can understand if you're that concerned, maybe something else is a better choice here than just loading up. But again, if you're expecting the bottom to fall out and maybe you're contractually obligated, you cannot sell the stock. Hence this 5,000 lot. This is someone who probably has got some shares to the tune of probably 500,000. Perhaps this was the best of bad options. We'll keep an eye on these. What are your thoughts on these puts? What are your thoughts on GOGO Wireless? It's still looking pretty lofty. The other names like American Airlines have kind of come crashing down a bit, but not GOGO Wireless, at least not a ton. So maybe our friend here is on the right tip. There's more to go. Let's go out here now, listeners, to, let's see, what do we got up here next? We've got, I think this is a newcomer. This is Agilon Health Inc., ticker symbol AGL, Agile. Trading right now, $18.59 off a $1.02 or 5.2%. Let's see, on the year, this thing was trading 38.25 on June 14th. Man, this thing, they've come for this. It got as high as 44.83 on June 18th. And then ever since, it is straight down. They loved it until they didn't, listeners. It was trading $23 in October, and right now it's trading 18.5. The low actually came, looks like back in February. Actually, no, January 27th. I take it back, 15.01. So we're not quite there. It's at about 18.59 right now. So it's got a little bit of room to go on the downside, just looking at this chart. But either way, a pretty rough year, pretty much been cut in half, off 51% on the year. I don't see here what particular area of health these folks operate in, but not looking good here. No PE, never a good sign there either. No money being made, even though they do have a $7.5 billion market cap. And oh, surprise, surprise, Mr. Uncle Mike, you're never going to believe this. Our next name, also a whole bunch of puts. I know. So stem your shock, sir. It started off, we saw a massive block of 2,807. That is, of course, massive for this name. Going up for 85 cents, lifting the offer. That was a 68 vol. When the stock was 30 cents higher, 18.89. And we thought, that's interesting. Maybe go back and see if you can find any others that might corroborate that or add to that. And sure enough, we did. There were, right before that, we saw 555 going up about 20 minutes earlier for 85 cents as well. And then another 885 cents about a few minutes after that. And then more kept printing. Total of over 5,000 on the day of these July 17 half puts. So 5,000 lots of puts seem to be the order of the day out here. We also have a stock that isn't that far removed from what we were just talking about with GOGO Wireless. Yeah, they're both $18 stocks, and they're both doing roughly 5,000 lots, even though the Agilon ones were broken up a little bit. But still, 5,000 lot of puts. These ones a little bit closer to the fire here, listeners. Also closer from an expiration perspective either. These are the July 17 half. So he paid 85 cents. Our other friend paid 80 cents. He got the AUG 15s. This person came in and paid 85 cents to get the July, but he got 17 half. So he got a point right below the market pretty much closer from a strike perspective than the August trade we just profiled. So again, kind of a pick your poison. Do you want more time, or do you want closer to the fire from an expiration perspective, more hedging value and potential? This person obviously chose the latter there. Interestingly enough, this does not include earnings. Earnings are on August 3rd, so this will not cover them through the earnings announcement. So clearly their concerns lie elsewhere. They want to get themselves hedged out on Agilon through July expiration. They're willing to stop themselves out a little bit shy of $16, which again, the low for the year is $14.36. So there still is some wiggle room there. Intriguing stuff. Mr. Uncle Mike, kind of a tale of the tape. Two different approaches to 5,000 lots here. One guy going a little bit farther out of the money, but getting an earnings announcement in there. This other person playing closer to home, closer to the vest, closer from an expiration perspective, but not protecting himself through earnings, all for the same amount of money. Which do you prefer, sir?
For purpose of hedging, I prefer neither. For purpose of being bearish, I do prefer the first one because you will have the opportunity to make money. Whenever you're trading an option, you need to have a reason. Why is the stock going to go up if you're buying a call? Why is the stock going to go down if you're buying a put? And the first choice, the guy has a reason, or the gal. So I apologize if I sound sexist for all of our female listeners out there. But I really believe that more time is a better way to go to give yourself more of a chance for something to happen. Unless in the second choice, you're really bearish on an upcoming event or an upcoming technical breakdown or whatever the case may be that we're not seeing, then I definitely am a fan of the first one if I am a bearish market participant. If I'm hedging, I don't like either of them. I think that you're better off just using a spread. If you don't want to use a spread, and you don't want to be in a stock at that low of a level, then quite frankly, I wouldn't want to be in the stock to begin with then. So that's my 2 cents on choice one and choice two.
That could be a new rebranding for the strategy block. 2 cents from TOSAW. What do you think?
Love it.
2 cents from TOSAW. Coming up a little bit later in the show, listeners. First, we have to go around the horn and actually pay off a trade. Well, close to pay off. It's not quite expiring yet, but we have a lot of things popping off by the end of this week, so we have to get rolling on some of these June expirations. Let's go back now, not that far, listeners, to May 26th, to our episode where we talked about IMAX. You remember them, the large screen theater chain out there, trading right now $15.30, off about $1 or nearly 6% today. So they're coming for it today. Ticker symbol, of course, IMAX, IMAX. A year ago, they were trading $22.33. They got as high as $23.35 on June 25th. Then they came for it hard back down to $13.67. And then they rallied again October 22nd. They hit $21.85. Then they kind of came for it again in that later wave of all the Omicron stuff. They came back down to $15.92. They bounced off that level a few times. They did it in December. They did it again in January. Then they tried rallying it again at the beginning of the year, maybe looking for a little bit of optimistic outlook, 21.14. So they got in February. Then everything sold off, took IMAX with it down to 17.11. Then they rallied again. They kept trying to pop this name. March 28th, they got up to around $20, and that was kind of it for the year. Then they started selling off again. By April 28th, they were down to $14.98, and they've been kind of bouncing in this pretty much 15 to 17 range for the better part of the last few months. They also topped out on June 8th, at least for the near term, at 17.25. That's not their high for the year. And then they've been selling off pretty much ever since they're down to where they are right now. 15.30. As you'll recall, listeners, on our May 26th show, we talked about someone was a little bit concerned about the near-term prospects for IMAX. So they came in and scooped the June 15 puts, 5,000. Again, 5,000 is the number. Man, all of our trades these days, 5,000 lots of puts. Interesting. 5,000 of these for 55 cents. That was pretty much, actually got a little bit better price. These were 45 at 60, so they got a nickel better. A little bit of price improvement for your 5,000 lot. Always nice. The stock was $15.89 at the time, so it has sold off a wee bit. That's kind of your tail of the tape right there. There are earnings, but not in the lifespan of this. The earnings are going to come up in July. So yeah, ever since they put this trade on, the stock instantly looked like this was a terrible trade, because the stock pretty much rallied the second after they put this on. In fact, the high for the period, the holding period of these options came the day after this trade on May 27th at 17.39. So these were almost instantly a loser. And then they started selling off again to 16.70 on June 3rd. Then the stock rallied again, got caught up in all the rally, back up to 17.25. So for pretty much most of the lifespan of this trade, the stock has been north of $17, which not exactly great for 15 puts that you paid through the nose for. And then this recent sell-off is coming to their aid. But is it too little, too late? Again, they have until expiration this week. So I can't pronounce death on these prematurely, because they could break through the 15 strike later today. The stock is at 15.30. All we know is right now, these puts are still open, and these puts have pretty much eroded down to zero. You can buy all you want for a nickel, listener. So they're out about $250,000 on this 5,000 lot right now. Now, again, that could change imminently. This thing breaks through the 15 handle, all bets are off. But for right now, Mr. Uncle Mike, this is almost the definition of a coin flip trade here. It's a lottery ticket. Will they, won't they? What are your thoughts on this one, Mr. Uncle Mike? The fact that they're out money right now, but maybe they have a chance by the next time we're talking on Thursday. Maybe they'll be in the money. What do you think, sir?
I mean, anything's possible. Give a quote the Viceroy gave one time when we were talking about the lottery on this show. When you play the lottery, you have a slightly better chance of winning if you play. And I'll leave it at that.
More 2 cents. Uncle Mike just full of the 2 cents of wisdom, which is perfect because it's time for 2 cents from TOSAW, a.k.a. the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, he's in the mobile office, so connectivity always dicey. But we'll see what 2 cents of wisdom Uncle Mike has in store for us this week, sir. Have at it.
So I want to go through today my garbage put strategy and how to exit it. What I was going to go into today is in my series of what I was going to put on YouTube was going to be short call spreads. But for today, just because of the uniqueness of this market that we're having lately, I'm going to kind of detour from that for a week just to go through something I think is important. So I've talked about my garbage put spread strategy on the show before, and that you have a longer term short put spread, but you're concerned about weekend risk, but the long put spread's still out of the money, but you want to sleep over the weekend. And also because of the fact that you really can't trade on the weekend. So if we do have some type of crazy event over the weekend, you want to be protected. So this past weekend, I bought another garbage put spread that expires today. And market went down, but didn't go down near far enough to make this garbage put spread needed, so to speak. But it did go down far enough to make the garbage put spread profitable. So what I want to emphasize today, and I say this a lot, plan the trade, trade the plan. At about the open of the market, within a few minutes of it, my garbage put spread was ahead Not a ton, but by percentage, it was up a ton. But I think I almost doubled my money on it. But it was double of something so small as something so small. So I really wasn't that excited about it. But my point is that when you pay a nickel, a penny, or whatever for one of these garbage put spreads, do I sit and wait all day in hopes that the market will go down and take a chance on it? And my answer is a big fat no. And the reason is that number one, it's likely not going to happen most of the time. I mean, it could happen today. We could be down at 3,200 by the end of the day, and I would be regretting not keeping my garbage put spread. But most of the time, that's not going to happen. But number two, it's important to keep doing what you originally wanted to do with the trade. My objective with this garbage put spread was to give myself weekend protection. It did it. It did its job. And so from there, if I can get what I deem as free weekend protection, or even making a nickel or a penny or whatever it is over the weekend, done. I'm out. Oftentimes we've heard this, and I heard this from a lot of veteran traders through the years. When you're debating over should you stay in a trade or get out of a trade, would you get into that trade if you were flat right now? And if the answer is no, then more times than not, you should probably get out of it. And so for me, would I buy an out-of-the-money put spread that expires the same day? Never. And so it's for that reason that I get out, usually right around the open. Like sometimes if it's like the market's at 38.10, I might say, okay, I'll stay in it for another 5 minutes unless it goes up to 38.15. I mean, I might do something like that to try and get a better fill. But aside from that, I get out right away on Monday if I can get anything. Now, if it's worthless come Monday morning, which it is 99% of the time, then I'll sit on it throughout the day because it's a lottery ticket, but it's a free lottery ticket. And from there, if someone were to buy me a lottery ticket in real life, I would play. But if they're not going to buy it for me, I will never play the lottery. And so what I want to have I want to leave everybody with today is just don't get greedy and use the hedge for the purpose of what you're planning to hedge if you are buying weekend garbage put spreads. And that's the strategy block for today.
A good bit of 2 cents from TOSAW as we continue with the show Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of the week until we come back here on Thursday's episode. Does seem like we're seeing a little bit of a bounce out here. Still off about 2 3/4%, but we're not exactly at the lows of the session here, listeners. Either the low for the session looks like came around 37.53 or so. So yeah, intriguing stuff here in the S&P. So sell-off mitigating a little bit today, but again, we've seen this a few times, this movie now play out. So maybe keep some of your powder dry. Don't think this is the beginning of the reversal. Let's be judicious out there. We want to have you folks around for a long time to listen to the network. We asked you guys a question of the week last week. Let's pay it off now before we launch our new one here this week. We asked you last week, SIBO made big headlines last week, launching a new open outcry trading floor. We asked you very simply, does open outcry still have a place in the modern options market, or is it an outdated relic of the past? And 45.3% of you said yes, it is still important. 30.2% said nope, electronic or bust. And nearly a quarter of you, 24.5%, said what's open outcry. So that latter portion, we have some work to do with you folks. We'll teach you. We'll train you up. Start listening. Obviously, keep listening to this show. Tune in to Options Bootcamp, Options Playbook Radio. We'll get you in fighting shape in no time. But you know who's always in fighting shape? It's Uncle Mike. Mr. Uncle Mike, sir, what are you keeping an eye on before we can gather here together on Thursday?
I think the main thing right now is the Fed. Of course, I'm watching the numbers of the S&P, continuing to just make sure that we stay above the levels that I need to on my short puts, and then monitoring covered calls and things like that on other investments. But for the most part, the Fed's the only thing this week that matters right now. I could be wrong. Bitcoin might create another margin call that stock market, but I'm watching the Fed. Some people say 50. Some people say they might surprise at 75. Wednesday's a big day, folks. Make sure you're hedged and prepared, and you have your risk in place before Wednesday.
If this surprises Uncle Mike, we only get like a quarter of a point. How much do we rally that day, you think?
I don't know if we do rally.
Really?
Interesting. I think that we wouldn't be so scared of inflation. I think I will say this. I think we would have more of a rally if we went 75 than if we went 25.
Interesting.
I'm predicting 50, but I think if we go 75, then people think, okay, then maybe they're just going to try and take the Band-Aid off right now. Let's rally.
So the boogeyman of inflation is now eclipsing the boogeyman of over-aggressive Fed.
I think it is. I mean, we'll see, but this is going to be. I'm looking forward to this Fed announcement more than any other Fed announcement I've ever looked forward to. This is going to be interesting, that's for sure.
Maybe our question of the week this week should involve the Fed in some capacity. We shall see. That, music listeners, means we've come to the end of another fun sojourn through the world of options. Before we go, Mr. Uncle Mike, if folks want to reach out to you on places other than BitcoinReallySucks.com, where should they go? What should they do?
Check out my website, stcharleswealth.com, if you're looking for a financial advisor that actually watches this stuff and isn't looking to pitch other people more mutual funds all week. Check it out. Follow me on Twitter. I try and put out as much content as I can at Mike TOSAW, TOSAW. And if you're looking, like I said, if you're looking for a financial advisor that watches stuff, give me a call. Reach out to me on my site.
Uncle Mike, I just went to your URL and it's just parked. At the least, you got to redirect that to stcharleswealth.com, sir. What are you doing?
Hey, I bought BitcoinReallySucks.com. That's my way of shorting Bitcoin.
There you go. That's his $20 invested in the shorting of Bitcoin. Hit him up. Let him know. stcharleswealth.com is the place to go. We got to get on out of here, listeners, but we'll be back. I know a lot of you are probably excited or interested for the crypto rundown. It's coming up in a little bit here. All you live folks will get it in your ear holes second it goes live on demand, folks. You'll get it when it hits the network out there. Got some guest shuffling going on, as you might imagine. There's a lot of madness afoot in the world of crypto right now. We'll have a great guest coming at you and a lot of great analysis of all the vol and the madness unfolding in the world of crypto this week. You have a question, hit us up, let us know. We'll see if we can work it on into the program. Then back again tomorrow, pro Q&A time for you pro folks with the international author now, Mr. A.K. Bias, also known for his research into dubious correlations and volatility, all that fun stuff. So that should be a fun one. Look forward to that tomorrow. Wednesday, double dose of Options Bootcamp, Options Playbook Radio. And then we're back again on Thursday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.